Today, we'll dive into a detailed analysis of SoFi's performance and expectations for the coming week. We'll discuss factors that might lead to price fluctuations, the influence of broader market trends, and SoFi's position in the industry. So if you're an investor or just curious about what's happening with SoFi, hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. The start of the week brings a slew of Federal Reserve speeches on Monday, Tuesday, and early Wednesday. The statements and tone of these speeches had the potential to cause significant price swings, especially if there's any unexpected commentary on monetary policy. With the market already anticipating a 25 basis point hike and only a small 2.6% chance of no change, any talk of a larger 50 basis point hike could shake investor confidence and introduce more volatility. It's unlikely that the Fed will address policy changes directly, but we'll have to wait and see. The middle of the week, specifically on Wednesday, features the release of the Federal Open Market Committee FOMC minutes. Historically, these minutes have triggered heightened market volatility. It's crucial to keep an eye on this, as it could influence not just SoFi, but the broader market as well. As we move to Thursday, we'll see the release of the Consumer Price Index, CPI, and initial jobless claims, followed by the Producer Price Index, PPI, on Friday. Additionally, Friday marks the beginning of bank earnings season. SoFi tends to be seen as a bank, especially during periods of market negativity. If traditional banks report weaker than expected earnings, it could potentially drag down SoFi's stock price. On the other hand, if traditional banks show strength, SoFi may stand apart as a unique player in the financial technology space. While SoFi doesn't have any specific events, conferences, or announcements scheduled for this week, we need to consider broader market sentiment. The Fear and Greed Index is currently leaning toward greed, which implies a higher appetite for risk among investors. If the upcoming economic data is favorable, we could see the index shift into the extreme greed territory. This is significant because just a year ago, we were in a state of extreme fear. A full reversal in sentiment could drive more investors toward high-growth stocks like SoFi. Short sellers have played a big role in SoFi's price movements recently. When we look at the cost-to-borrow rates, there have been instances where brokers were effectively paying people to short SoFi. Historically, this has led to short-covering rallies. Although history doesn't always repeat itself, it's worth noting these patterns as they can provide valuable insight into future price movements. SoFi managed to gain some ground over short sellers last week. Market makers were busy covering shares linked to options, and there was also noticeable short interest covering on Friday. Ideally, as we approach SoFi's upcoming earnings, we want to see short interest drop to around 15%, which would create less downward pressure on the stock. Looking at the options market, SoFi closed above $8 last week, but didn't manage to stay above $8.50. This means that several strikes, such as 1,000 contracts at the $7 strike, 4,000 at $7.50, and 35,000 at $8, are now in the money. This resulted in market makers stepping in to cover these shares on Friday, leading to larger than usual trading volumes. For this week, SoFi has around 10,000 contracts open at $8, 26,000 at $8.50, and 6,000 at $9, expiring by October 11th. While $8.50 is a relatively high level of interest, a strong performance by SoFi could push the stock above that. Based on technical analysis, $8.39 serves as a critical pivot point. If the stock breaks above this, the next resistance levels are $8.81 and $9. Currently, SoFi is trading near the $8.39 level, which is right around the R1 resistance point on the one-day chart. This makes it a key level to watch. Breaking above this could set up a move toward $9 and possibly even double digits ahead of earnings season. On a shorter time frame, the 4-hour chart shows the stock trading between the R2 and R3 resistance levels. Support can be found around $8.23, but it's not as robust as on the daily chart. Keeping an eye on these levels could provide a good indication of where the stock might head in the near term. The broader market is in an interesting place right now, with a lot of focus on economic data and upcoming earnings. This has led to increased volatility, which might spill over to SoFi. Institutions have been stepping in to buy shares, which is a positive sign. Unlike algorithmic trading, which tends to follow momentum, institutional buying provides strong support and could help stabilize the stock price. Over the past week, we saw large gaps of buying activity during the trading day. This is encouraging because on a typical day, SoFi often faces a lot of selling pressure. With institutions stepping in, it shows increased confidence in SoFi's long-term potential. SoFi has been making significant progress in diversifying its revenue streams. Management has been emphasizing the technology side of the business more recently, moving away from being perceived as just another bank. This narrative shift could play a crucial role in the upcoming earnings call. If SoFi can show strength in its technology offerings and differentiate itself from traditional banks, it could lead to a significant re-rating by Wall Street. Despite having superior growth rates compared to many brick-and-mortar banks, SoFi is often pigeonholed into the same category. A strong earnings report could be the catalyst needed to propel SoFi into double-digit territory and sustain it there. As we head into the new week, expect some bumps along the way. There's a good chance of increased volatility given the packed economic calendar and the start of earnings season. However, the recent buying by institutions and the potential for short covering could provide a strong foundation for a rally. Keep an eye on those critical resistance levels and be prepared for some profit taking if we see a strong run-up. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.